Well, I'm delighted today to be speaking to Tom Weymouth here at 1 Great George Street in London. Welcome, Tom.
Hi, David. How are you?
Very well. So we're going to have a little chat about your background, your focus at Merriwey and also at Mark Dean Wealth. We're going to talk about some things you're seeing with clients, some topical things in the market, and also the fact that you're part of PCD and the type of PCD members you like to work with and meet. So it'd be great to kick off the conversation with a little bit more about your background.
Right. So where do I start? I was in industry. I've been in industry for 35 years, and 5 years ago I made somewhat might say a stupid decision or a bold decision, but I decided to remove the shackles of employment and also the security and start up my own business. So I'd worked for 5 employers over those 30 years. The main ones really, which I took the skills from, were Barclays, where I learned a lot about private banking, client relationships, and my last role was the head of business development at private banking, where I was liaising with lawyers and accountants. Also Grant Thornton, I learned a lot around tax planning. And lastly, my last role was working for a corporate services provider, international corporate services provider, where I was doing a lot of work for high net worth individuals, family offices, and also state, private, and public entities in terms of international structuring. And in some cases, I was providing the director service for those individuals. So what I wanted to do is bring all those skills together and deliver them to clients that I've met along the way. And that's when I formed Merriwey back in 2019. At the same time, I realized that it's not just the consultancy work that I needed to focus on. My passion is wealth management. So I wanted to have a platform to also work with clients and give them financial advice and investment management advice. So I teamed up with an ex-colleague of mine called Dean Mullally, who had a business called Mark Dean Wealth. He had started that in 2010 with a chap called Mark Davies, who was an international tax advisor, who I believe you know as well. But Mark wanted to focus on the tax side, and Dean wanted to focus on the financial planning side. So Dean was running the business, and he wanted somebody to come in and help him. I needed the platform, so we started to work together in 2019.
And what kind of things under the financial planning umbrella might you do within that business?
So Mark Dean Wealth is, I suppose it's slightly different, but everyone says they're slightly different in that it focuses on international clients, mainly INPAT, so UK res non-dom clients. And that's why that initial setup was with Mark Davies, who focuses on that area as well. It's quite a specialist area, it's quite a niche area, and you need to ensure that when you're giving and advice, that those products and that advice is suitable, not just from a risk mitigation perspective, but also from a tax perspective, because there's a lot of pitfalls that one can fall into.
What are some of the traps for the unwary they're dealing with if you're providing financial advice to non-doms? What sort of things are you considering and thinking about?
Well, when they're coming into the UK initially, they need to make sure that they arrange their affairs so that only capital is remitted to the UK initially. Also, they need to be aware of remittances that they can be doing unaware of, so constructive remittances as well. So it's things like that which the expertise in our team helps, and also using offshore platforms where we have funds which are designed for UK res non-doms. And this worked quite well with the Merriwey side, because the Merriwey side was dealing predominantly with consulting international clients on coming to the UK as well.
And what might a Merriwey client look like? What are some of the services that you would consult on if they're inbound into the UK?
So an example that we had in 2018 was a Chinese electronics business which came to the UK called TCL Group, which is one of the largest groups in the UK, in the world. But they wanted to enter the UK market, and they needed a UK director to help them with that entry. So to help them be introduced to lawyers, accountants, to set up the infrastructure, to also set up bank accounts, and really somebody to sit on the board who was very familiar with UK corporate law under the Companies Act, to make sure that they were doing the right things in the UK. So that business needed a UK director. I was appointed to the board of that particular business, and I've been on that business since they launched in the UK. They started off very small, and now they're one of the largest providers of LCD televisions in the UK. And in fact, Black Friday, which I believe is tomorrow, last year they were number one in terms of sales on Amazon.
Fantastic.
So we distribute products through AO from Amazon, and we've signed a large agreement with Sainsbury's and Argos, and recently we've just signed a sponsorship deal with Arsenal Football Club, of which I'm a fan, so that's great.
Fantastic.
So Merriwey,
your broader skill set allows you to, in that role, you can draw on a lot of expertise from a whole range of different fields, isn't it, to bring value to that role?
Definitely. So Merriwey is about providing consultancy. It's helping people who want to come to the UK, maybe corporates who want to structure. Some of them who find difficulty opening things such as bank accounts, which can be very, very difficult. And in some cases where I've got long-standing clients, I act as a director on their entities. So there's some family office clients that I work with where they have a particular entity which has a particular asset, and they need somebody in the UK who they trust to make sure that that asset is protected. Now, how does that knit into Mark Dean Wealth? Well, from those particular clients, they also have people who are in the UK, and they have contacts who need advice in the UK, which needs to be regulated. So that's how it fits in with Mark Dean Wealth. And really, regulated financial advice is my passion. It's my background. I took all the requisite examinations. So I'm a fellow of the PFS. And also in 2020 during COVID, I actually took a master's in financial planning and wealth management. I'd done a study on robo-advice and how that interacts with trust as well. So that's my passion. Whereas the Merriwey business is more of a consultancy business that I've had, and I've got long-standing clients who, for whatever reason, they still want to retain me for that particular role. And it works quite well. Dean's quite happy with that setup and that arrangement.
And do you do then under that, pensions advice, insurance? Are they sort of core pillars of what you're doing as well with these international clients coming into the UK? Yeah,
so a typical example would be an international client comes into the UK and purchases a property in the UK, purchase it for cash, and then suddenly they've got inheritance tax liability. So where Mark Dean would help is we would arrange the life cover for that particular transaction, so that in the event of their death, the money is paid for a trust, and effectively there's no inheritance tax to pay. So the businesses do work well together. They intertwine together. But Mark Dean is the area where I'm going to be focusing on more going forward, and we're currently in negotiations for me to take up 50% of the business as a shareholder. So I'm really excited about that. But Mark Dean is an IFA business. It's whole of market and independent. And recently there's been a lot of noise and a lot of activity around consumer duty, which has been an eye-opener for us as well in the industry, and I'm sure for a lot of other IFAs.
So obviously when RDR came in a few years ago, the idea of like the fee-based wealth planning type firm was almost a novel approach, wasn't it, in the market? I mean, how do you see the IFA market? Obviously we're well past and into that now. How do you see the best service providers operating with transparency in this environment?
Well, I think the FCA and in particular consumer duty legislation is really driving that change. It's some people call it RDR on steroids, and most firms had to be compliant by July this year. For new products, for legacy products, it's July next year. But the fundamental principles of consumer duty are the principles that we've always had in the business anyway. And that's treating your customers fairly, making sure you're giving them the best products and service, and making sure that the price point is fair and reasonable, and you're not creating any foreseeable harm for your clients. So what we had to do is initially we had to do an initial gap analysis, a consumer duty gap analysis. Then we had to look at a foreseeable harms study, and then an implementation plan. And when we went through that journey, which probably took, it was about 5 meetings with all of the team, 5 full-day meetings where we went through all of that information. We came to the conclusion that we're already consumer duty ready. There were gaps, there inevitably are gaps in terms of how we documented the processes, and that's what we did as part of the work. We made sure that the processes were documented so that a third party can come in and query, what do you do in this scenario? How do you ensure that your clients are protected in this particular scenario? How do you analyse your vulnerable clients, etc.? So we now have a process to do that. We've always had a process, but it's now documented.
And are more tax-driven investments like EIS and VCT still popular? What do you see of, I suppose, alternative investments that have a tax flavour? Is it something that is on the radar of these international clients in the UK, or really it's just about managing, say, the non-dom regime and that? What do you see of the other types of investments, I suppose, that would be positioned for tax efficiency?
Yeah, we do look at those investments, but if I'm honest, they're a small part of the business that we do. They're for a particular type of client, and some investments, especially VCTs, have done very well over the last couple of years, where traditional markets have actually done quite poorly. But in the main, our business tends to be traditional market investments, discretionary portfolios, advisory portfolios, and then structured notes, cash deposits, and the main.
And it's been a challenging time in markets, hasn't it, recently? Unprecedented, if you like, levels of volatility and risk and uncertainty. I mean, how are you helping guide clients through these difficult times with big decisions to make on how they protect and preserve the wealth they have?
So our business has always been about the financial plan. The investment philosophy that sits under that and the investment products and services support that financial plan. So we've had to have conversations with clients over the last 18 months around portfolios. I don't think any portfolio manager in 2022 made a positive return, or very, very few. So the majority of people that you speak to will say, yes, we were negative, but we were only 5% down, and the other one was 7% down, and this one was 10% down. So we've had those discussions with clients, and it's important to make sure that you're regularly speaking to your clients about that, and you're reassuring them that the financial plan is still in place. Now, what I mean by the financial plan is they have an ultimate objective, and that's to retire at a certain age. It could be that they want to raise money for a particular purpose. It could be that they want to gift their money away for tax efficiency. And what we use within Mark Dean is we use regular conversations with clients, and a very powerful tool that we're using currently is cash flow modelling, to actually show them that their assets sit here. This is where we anticipate that they will ultimately be ill and unfortunately die. So we have to have that conversation with clients. Are their assets going to last them from this point to that point? And if they are, and the return that they need to get is lower than taking a risk or too much risk on your investments, then you can dial it down. So we've had conversations with clients recently around, yes, the portfolio has gone down. But we always ensure there's enough liquidity to meet those short-term needs over the next 3 to 5 years, so that you don't have to go into those investments. You don't have to encash them investments. And is your financial plan still in place? And the answer is, in most scenarios, yes, because a good financial planner will make sure that there's always enough liquidity to deal with these peaks and troughs in the market.
And I guess in an inflationary environment that we find ourselves in now, clients having to think different ways about cash and the returns available out there, because it wasn't winding the clock back just quite a short period. We were in a zero kind of inflationary environment for a much longer period. So are conversations coming up now, obviously, about the inflationary environment? If people have cash deposits and they're looking forward, they need to make sure that cash is going to last in real terms, isn't it? Is one of the big threats to wealth, it feels like right now, because the inflationary pressures don't seem to be subsiding in the short term, and we could have inflation baked in for a good period to come, couldn't we? So a saver's trying to prepare for that.
Well, I think the narrative around inflation, we've been, since the financial crisis, we've been in a bit of a bubble, really, because we've had zero inflation, interest rates have been very, very low, and markets have just gone one way.
Artificially depressed,
exactly. Going forward, I don't think we'll ever get back to that position, because that position was created because the government needed to create that position following the financial crisis, and quantitative easing was the driver of that. However, going forward, we do believe that inflation will come down, and we believe that a figure of 4%, long-term inflation, it probably won't go back to the 2% target that everybody's referring to. But over the longer term, in order to beat inflation, equities, or a balanced portfolio, which includes equities and bonds, has always outperformed inflation over the longer term. However, clients' mindsets currently are well, I can get 6% on cash, I can tie up for a year. Isn't that great? Without taking any risk. And that's a short-term solution. But in terms of what we offer to clients, we offer whole of market. And in that scenario, we offer a platform which gives them access to cash deposits, many different types of cash deposits over many different terms through one entry point. So they only have to complete one application form, and we can give them a laddered approach to their cash deposits. But in terms of the longer term objectives and the longer term plan, we always recommend that they have a diversified portfolio. And when we look at the solutions out there, because we're independent holder market, we don't choose any particular product provider. We have 5 key providers of our discretionary managed service, or MPS as it's called, because discretionary managed is slightly more expensive for some clients. If they've got an advisor who's particularly well versed in markets, the question is, do you need an investment manager and an advisor? In some cases, the answer is yes. In some cases, it's no. So we've got products to assist those particular clients with those needs, ranging from cash to a diversified portfolio, and even in some instances, we've had discussions with clients around specific opportunities in the market where they can get return in these down markets.
Okay,
but that's more on the consultancy side rather than the financial planning side.
And just zooming out, I mean, there's as I said, it's a challenging environment out there in the global economy. The UK, though, still, despite the doom and gloom, punches above its weight. I mean, do you still see interesting people coming to the UK for the first time? I mean, you mentioned you're consulting for an Asia group that sees expansion and growth here. What's your view on just the UK and London and its performance internationally as a place to draw in capital, wealth and talent?
I think it's still a magnet for that, especially in jurisdictions where the regime is not so secure. I still see a lot of interest from the Middle East and Africa in particular, where people want to have a footprint in London. They want to send their children to, British schools. They want to eat in British
the London lifestyle.
The London lifestyle,
yeah,
exactly. So I don't see that changing very soon. However, as we face a potential change of government and the non-dom regime becomes less and less attractive, and it has been watered down over the last 10 years, as you know, that may impact some people in terms of their willingness to consider London. However, there's the tax side, but there's also the lifestyle side, there's the security side, and there's all the other factors that you need to take into consideration when making that choice. And it's never about the tax tail wagging the either investment dog or decision dog.
It's the lifestyle people want, isn't it? And then you make that happen.
Yeah. I mean, when I used to work in Barclays, and we used to work with the entrepreneurs team, and they'd sell a business, and then they'd suddenly say, well, how do I actually mitigate my tax? And one of the ways was that before you sold your business, you change your residency. You might move to Monaco, or you might move to Geneva or somewhere which has a lower tax regime. You stay out there for complete 5 tax years, and then you come back. We had situations where people moved to other jurisdictions and they just didn't like it. So they decided to come back and pay the tax. And we had other people who stayed in those jurisdictions because those jurisdictions do offer, good alternatives for clients. And if you're a high net worth individual, it's important that you have a team of advisors around you that can help you make those decisions. I had a client recently, about 18 months ago, who wanted to move to Cayman Islands. We helped her, we introduced her to lawyers, we introduced her to property agents. She put an offer in a property. She went out there and she decided, look, it's not for me. And she didn't move to the Cayman Islands. So sometimes it's not just about the fiscal or the tax element, it's about all the bits that go around it, which is important.
And in terms of that team, I mean, obviously within PCD, we're a broad church, we've got lots of different types of advisors. I mean, where's a good fit for other PCD members and the sort of services that you're providing?
Well, like I said, I've been in the industry 35 years, and my network was always strong because of what I did with Barclays. But what I was finding that once you reach a certain age, some of those advisors that you're working with, they retire.
Yeah.
And a large proportion of those advisors I used to work with for some of the larger firms, they'd retired. So For PCD, it's about refreshing my network, maybe dealing with some of the younger partners in some of those firms. But for Merriwey in particular, and for Mark Dean, we do need lawyers to work with us in terms of wills, trusts, etc. We need accountants to help our clients mitigate their tax affairs. We need property agents to help find property, whether that's commercial or whether that's residential. School specialists, yes, we've come across them in a few occasions, but not as important as the other three. The other three professionals. So I think PCD is great to be able to network and continue to refresh your network, and also to meet some of the younger professionals out there.
What are some of your top tips then for networking? I mean, you're a good networker. You're out there.
Yeah.
What is it that you've learned over those 30 odd years about networking that you think is something that if you were coming into the sector today, you should be thinking about, or any professional, regardless of their stage? How should people think about what does good networking look like?
It's an interesting one, really, because naturally people don't want to be rude. They want to have a conversation with someone, and they believe that when they have a conversation with someone, that conversation should go on for 10 minutes, 15 minutes. But when you go to a PC dinner, if you do that and have a conversation with someone for half an hour, potentially you've only got 4 contacts at the end of the night. So my way of approaching it is I have a target in terms of how many business cards I want to collect. Normally it's about 20, 25. I think the last dinner, I collected 32.
Oh, wow. You got around.
Yeah, I got around. But essentially, you have a quick conversation with someone, you exchange business cards, and you say, look, not being rude, but I'm here to do some networking. I'll follow up with you in a week or so's time. And I think people generally, they're okay with that. And I've actually noticed that other people are doing that as well. And I think that's a better way to approach it, because with PCD, the infrastructure is great because you've got all these people in the room. And in fact, it's too good because there's too many people for you to interact with. So you have to have a strategy in terms of how you do that and how you get the best from it.
Fantastic. Well, look, Tom, great to talk to you today, and look forward to seeing you at an event very soon.
Thanks, David.